Welcome to Iron Financial. Here's our mission, plain and simple. We help you forge a stronger portfolio. We're here to cut right through all the market noise, the hype, and the weakness to find out what a company is really made of. We look for the bedrock, and believe me, we expose the cracks. Okay, let's get right into it. Today, we are putting Cloudflare, that's ticker symbol NET, directly under the microscope. After their latest earnings came out, the stock just exploded. I mean, it shot up over 20% in a single day. The market is clearly making a massive bet that Cloudflare is building the essential, the absolute fortress for the AI revolution. So the question we have to answer today is this. Is that fortress built on solid ground, or is it just a glittering facade, maybe a house of cards, just waiting to collapse? And that's really the $60 billion question, isn't it? Because that's what we're talking about, a $60 billion market cap. Look, everyone's chasing the next big AI story, but hype doesn't pay the bills. We need to roll up our sleeves, get our hands dirty, and see if the financial structure underneath can actually support that massive story.
Exactly. So here's the game plan. Here's how we're going to break it all down today. First, we're going to look at that earnings beat that got everybody so excited. Then we will really dig into the top line growth engine because that is the absolute core of the bull thesis.
Right, and after you've made the case for the bulls, I'm going to jump in and point out the very real cracks in that profit foundation. Because it's not all sunshine and rainbows and investors, you need to see the complete picture.
We will. Then we'll assess the balance sheet bedrock. We'll look at both sides of the ledger, assets and liabilities. From there, we'll get into the big picture, building the AI future, the grand vision versus the sky-high valuation. And then at the end, we will deliver the official Iron Financial verdict.
All right, let's get straight to the catalyst. The market absolutely went wild after Cloudflare dropped its Q4 2023 earnings. And, the numbers, at least on the surface, they looked fantastic. They fed directly into this narrative that this company is just an unstoppable force, the essential toll road for the entire future of the internet. So the bulls, they see this earnings report as nothing short of a rocket launch. And when you look at these numbers, you can kind of see why. Revenue, it came in really strong at $362.5 million, which just handily beat what the analysts were expecting. And that's a 32% year-over-year growth rate. I mean, that is incredibly strong for a company of this size. Earnings per share also just crushed expectations, 15 cents versus the 12 cents Wall Street was looking for. This is the exact kind of report that gets the bulls out there just pounding the table.
Okay, hold on. Let's not get carried away here. The rocket analogy is great, I get it, but even rockets have malfunctions. Just look at that last bullet point there, the guidance. Sure, they guided up on revenue for the next fiscal year, which, yes, the market absolutely loved, but they guided down on earnings per share. Now, why would a company with all this incredible momentum be telling the world they expect to be less profitable than the experts think? To me, that's not just some little warning light on the dashboard. That's the first major visible crack in the entire foundation.
That's a fair point, and trust me, we are absolutely going to get to profitability. But first, you cannot just brush past the sheer force of this company's growth engine. To really understand the bull case, you have to appreciate the foundation they're laying. And that foundation is built on relentless, accelerating top-line growth. This is not a one-quarter wonder. This is a clear pattern of disciplined, heavy-duty execution. Just look at this. This isn't just growth, it's a powerful, consistent ramp-up. In Q1 of 2023, they brought in $290 million. By the end of the year, Q4, they're at over $362 million. You can literally see the structure being built, quarter after quarter, brick by brick. Each quarter builds right on top of the last, getting stronger and bigger. This is the kind of momentum that investors are willing to pay a massive premium for, because it suggests they're tapping into a huge market, and their execution is nearly flawless. And when you zoom out, when you look at the bigger picture, the trend is even more stark. This is no fluke. In 2021, they did $656 million in revenue. In 2022, they were right there, knocking on the door of $1 billion. And now, for the full year 2023, they've cleared $1.3 billion. The trajectory is just undeniable. We are talking about a business that has proven, year after year, that it can scale its revenue machine. This is not some startup with a nice story. It is a full-blown revenue-generating machine. So, here's the crucial question. Where is this growth actually coming from? Is it sustainable? Well, it's coming from the most important place it possibly can, large enterprise customers. As of their latest quarter, Cloudflare had almost 3,000 customers paying them more than $100,000 a year. And that number is up a massive 35% from the year before. This shows you that the biggest, most demanding companies in the world are putting more and more of their trust in Cloudflare's infrastructure. It's becoming mission critical. They aren't just selling to small websites anymore, they are a core pillar of the modern enterprise. Okay, enough with the revenue romance. Growing your revenue is great, but anybody can sell a dollar for 90 cents. That isn't a business, that's a bonfire for cash. You call it a growth engine, but all I see is an engine that's just burning way too much fuel. It is time to look under the hood at the costs and see where the real cracks in this foundation are. Because remember, revenue is vanity, profit is sanity. And here it is, plain as day. The company tells you they made nearly $52 million in something called non-GAAP income. That's the headline number. That's what they want you to see. But what is non-GAAP? It's basically profit after you've decided to ignore a bunch of very real costs. The biggest one is stock-based compensation, which is a very real expense. It's how they pay their top talent. So the real number, the one that actually follows the generally accepted rules of accounting, GAAP, is on the right, a loss of almost $28 million in just one quarter. This isn't real profitability. It's a mirage created by some very creative accounting. And this is not a new problem. This is a chronic condition. Let's just look at the history here. As that revenue has marched up beautifully year after year, what has the net loss done? It stayed stubbornly, massively negative. Just think about that for a second. After all that incredible revenue growth we just saw, after more than tripling their sales from 2020 to 2023, they still lost $184 million last year. The revenue goes up, but the losses just keep coming. So the question for the bulls is simple. When? When does all this heavy lifting actually turn into real, sustainable GAAP profits? At what point does this company actually make any money? And this shows you exactly why they can't make a profit. Look at the spending in just a single quarter from last year. $134 million on sales and marketing alone. Another $97 million on research and development. I mean, these are not small numbers. To achieve that impressive revenue growth, they are spending an absolutely enormous amount of money. Their total operating expenses for just that quarter were over $300 million. It raises some really serious questions about the efficiency of this model. Are they truly building a durable, lasting business, or are they just buying growth at any cost? See, you're focusing on the income statement, which is just a snapshot in time, but you're ignoring the fortress they've actually built to sustain that kind of investment. Any major construction project requires massive upfront capital. The real question is whether the company has the financial strength, the structural integrity to see that project through to completion. So let's move on to the balance sheet and see just how solid that bedrock really is. This right here, this is the core of the defense against your profitability argument. As of their last full balance sheet, Cloudflare was sitting on over $1.6 billion in cash and short-term investments. That is a massive war chest. This is not a company that's in danger of running out of money tomorrow. This liquidity, it gives them the flexibility to absorb these short-term losses while they invest for long-term dominance. It provides a solid foundation to withstand any market turmoil and to keep funding their expansion without even blinking. A fortress of liquidity? It's more like a fortress built next to a giant pile of dynamite. Come on, you can't just show the assets without showing the liabilities. Look at the other side of the ledger. They have over $2 billion in total liabilities, and the most concerning part is sitting right there in bold, nearly $1.5 billion in long-term debt. So while yes, they have $1.6 billion in liquid assets, they also owe a significant amount of money. That debt is a structural weakness. It's a ticking clock that adds risk and interest expense, and that's going to become a huge problem, especially if their growth ever starts to slow down. Look, we can debate the balance sheet all day, but what the market is pricing in right now isn't just today's numbers. It's the future. Let's shift our focus to what they are actually building. The bull case isn't about the company today. It's about what it is going to become tomorrow. They're positioning themselves as the essential infrastructure, the steel beams, the concrete, for the entire next generation of the internet, an internet that will be dominated by AI. And this is the vision coming right from the CEO himself. He's not just talking about making websites a little bit faster. He is talking about a fundamental re-platforming of the internet. The core idea is that AI agents will become the primary users of the web, and Cloudflare will be the network that they all run on. Every AI query, every single inference happening at the edge, it's all going to pass through their pipes. They truly believe they were built for this moment. And that is a powerful, compelling story that, if you believe it, maybe justifies a high valuation. Oh, it's a compelling story, absolutely. But we aren't investing in stories. We're investing in businesses. And at a $61 billion market capitalization for a company that is still losing nearly $200 million a year on a GAAP basis, I'd argue that perfect execution of that story is already priced in, and then some. Investors today are paying for a tomorrow that might never even arrive, or at the very least, not in the way they're imagining it. Any hiccup, any tiny sign that this so-called agentic internet isn't materializing as quickly as they hope, and this valuation could absolutely crumble. And speaking of hiccups, there's a major crack forming in the leadership team itself. Just as they're telling everyone that they are at this critical, world-changing inflection point, the architect in charge of building it, their president and chief operating officers, CJ Desai, is leaving the construction site. He's leaving to become a CEO somewhere else. You just don't lose your COO at a moment like this without raising very serious questions. Who is going to oversee the day-to-day execution of this grand vision now? To me, it's a major crack in the leadership foundation at the absolute worst possible time. Okay, we've laid out the evidence. We have the explosive growth on one side, and we have the persistent losses and the very real risks on the other. It's time to weigh it all and deliver the iron financial verdict. Is this a generational opportunity to invest in the future of the internet, or is it a classic growth trap waiting to spring? The bull case is clear and it's powerful. You are buying into a company with absolutely relentless revenue and large customer growth. Their non-GAAP gross margins are excellent, hovering around 78%, which shows the underlying profitability of their services is strong. They have that solid $1.6 billion liquidity cushion to fund their growth for years, and most importantly, they are perfectly positioned as a primary beneficiary of the AI revolution. Management has even laid out a credible path to hitting $5 billion in revenue by 2027. For the bulls, this is a fortress with a deep and widening moat.
But the bear case is just as compelling, and it rests on tangible facts, not on future stories. The company is not profitable on a GAAP basis, and it continues to lose hundreds of millions of dollars. That is a fact. Stock-based compensation is diluting shareholders and masking the true cost of doing business. The valuation is through the roof, it's pricing in years of absolute perfection. They have nearly $1.5 billion in long-term debt, creating a serious structural weakness on their balance sheet. And, as we just discussed, the departure of the COO at this critical juncture is a major red flag. For bears, this is a structure with serious, undeniable weaknesses. So, that is the ultimate question that you, the investor, have to answer. Is Cloudflare building a skyscraper on a solid bedrock of innovation, one that is going to stand for decades as a core pillar of the new internet? Or is it all just a glittering facade, rising quickly but built on a foundation of debt and losses that simply cannot support its own massive weight?
The answer to that question will determine if this is a portfolio cornerstone or a catastrophic collapse, because at this price there is very, very little room for error.
Think carefully. That's our analysis. This is Iron Financial.
Quick disclaimer, everything I share is for entertainment and informational purposes only. I'm not a financial advisor, so please do your own research or talk to a professional before making any moves with your money.